Hello and welcome to another weekly financial update from RTS Financial Planning. Hope you're all well. So just as retail shops were started to open in England, we found out that Intu, owner of a large number of UK shopping centres, went into administration. This means an uncertain future for those shops that operate in these centres. We also feel for those of you in Leicester, as the country's first citywide lockdown was enforced due to a rise in COVID-19 cases. We are told to expect more of these types of localised lockdowns, as this is now the government strategy, hoping to contain the virus in small areas rather than go for a full national lockdown which has so many disastrous consequences. But in the UK we are getting the virus under control, as death rates return to the normal average for this time of year following the large increase due to COVID-19. House prices in the UK fell year on year for the first time in 8 years. But there was good news from the Bank of England, as its chief economist said that he didn't feel the coronavirus recession was going to be as bad as the bank had first feared, and the evidence was pointing to a V-shaped recovery. Time will tell on this. The recovery does appear to be in full swing in China though, where Chinese industrial companies posted their first growth in profits for over 6 months. This was at a time where they have passed their new controversial security law in Hong Kong, where the rights of free speech and protest are at risk, with large fines and prison sentences for those that criticise the Chinese government. There's been outrage in the UK and the US, and it'll be interesting to see how the likes of the UK and US react. Things also appear to be picking up in Europe, where inflation prices rose 0.3% compared to this time last year. But this is nowhere near the inflation levels in Zimbabwe, which are currently at 786%. In the US, the main stock market, the S&P 500, has just had its best quarterly return in over 20 years. This is all because of the support provided by the government and the US Federal Reserve. By keeping interest rates low and pumping huge amounts of money into the system, investors see equities as the only place to get a decent return. And as more people see the returns and the market's rising, more people want to jump in, buy in and join the ride. But we feel caution is needed here. The US stock market is very expensive compared to others. And whilst places like New York have got control of the virus, states like Florida and California are still in their first wave and are seeing new case numbers increasing. So that's it for this week. Hope you found it useful. As always, please comment below, subscribe to the YouTube channel, subscribe to the weekly email that comes out at rtsfinancialplanning.co.uk. Until next time, stay safe, take care, speak soon.